Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, December the 15th. The year is 2023. Let's talk trading. Weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. And it's the end of the second full trading week of December. Just a reminder on risk management. Do not lose more than you're willing to lose on any one particular trade. We take a look at the weekly chart and we can see that the pound is above the 1.27 mark. The dashboard tells us that all the gaps have filled. And you can see that we're 89 pips above the, 89 pips below the weekly high, 204 above the weekly low, and 182 across that weekly open. And if we take a quick look at the month, we can see that looking at this monthly chart, we are inside the upper wick zone of the previous month, but we did break that monthly high. And for the day, we're back in the opening range for the month. We broke through yesterday, but we're now back in that opening range for the month, but we're still above the opening range for the week by 114 pips at the moment. For the year, we're 617 above the open, 435 off the high, and 904 off the low. And as you can see, we have not pushed that annual range. So with all these pips, it doesn't look like we're going to push that annual range. But anything could happen. A lot of inside bar action here on the monthly, not so much on the daily and weekly. Though, for the pound, we are inside that weekly inside bar. You can see here we broke out of the inside bar 4 days ago. We broke out 3 days ago, and we're 117 pips above that range at the moment. Today we've had some red news, and the pound has responded with 105 pips. Take a look at the dollar yen. Remember when I called it out? It was at 151 and 150. Oh, there was 1,000 pips waiting to be had. Did anybody out there short the pound and ride it for 1,000 pips? I know I didn't. And that's one of those ones where you look back, or I look back, and I just have to kick myself. But sometimes we're short-term traders, we're not long-term swing traders, so we don't usually take those opportunities. Notice here on the hourly chart, we crossed above that daily open here at 127.64 and have just plunged. We're now starting a little comeback here. I think we actually cracked below the 127.00 line and moved back up. And you can see the green rats are getting ready to feast here. They've already feasted a couple of times. Not a big feast, but they got their cheese in and out of that green rat zone. For the pivot traders, Bambino flex indicator said to go long near the pivot. It didn't quite work out too well. Near pivot trading plan said long, near S1 long. Well, we got near the pivot, but we crashed through it. So, looking at the H4 candle and the daily candle, if it's red at the pivot and it says go long, you might want to tread lightly there. We did take out that daily pivot. You see we opened above, came back down. We failed to break yesterday's high, so in and out of that upper wick zone. Looking at the weekly, we took out the weekly, and we've yet to take out the monthly. We missed it by 16 pips, so that could still happen. Not sure. We just have to wait and see. As far as trading on H4, you see we've got a couple of missed pivots down here, And like I said, sometimes it takes a day or two to take out these missed pivots. So you see these, actually 3 down below here. And price spiked up here, almost did a double top, failed to make a new top, fell out of that wick zone. There was no wick zone here, and just kept falling out of the wick zone, the upper wick zones, then broke through the lower wick zones, and the rest is history, right? So once again, those wick zones, doesn't really matter the time frame, but price usually does not like staying in those wick zones. Speaking of wick zones, you can see here in and out of that upper wick zone a few times, and then finally out, actually hit the previous day's middle. And as I mentioned before, I've been doing some work with the previous midpoints, getting back to some old school trading. And one of the things is it's really simplifying and just, taking trades, minimizing the losses, and not really worrying, focusing on the process and not really worrying about the result. Because here, once again, 72% of the time it falls out the upper, out of the wick zone. So the range for the week, 294, 75 percentile over the last 12 weeks. We broke out of the high by 70 pips. We only broke out of the low by 2 pips. That gives us an outside bar on the weekly. High minus close. You red rats, 84. Close minus low for the green rats, 210. For the buy zone traders or weekly crossover traders, high minus open 272, open minus low 22. So all the traders had an opportunity to make money. And looking at the simple price action chart here, you can see what happened here at the 75 line. It failed to make the double O, so then it crossed back down, hit the 50. It couldn't get out of its own way. You can see lower highs, lower lows. And so then from 75 to 50, I'm sorry, from 50 to 25, and then 25 down to the double O, failed to hit the 75, back up to the double O. And you can see right now we're at 11, so price is just meandering. Now it's afternoon, almost 1 o'clock in New York, so most of those traders have probably packed it in, heading to the beaches or wherever. Was it Martha's Vineyard for the weekend to enjoy their yachts? Higher low, lower high. We had a trigger a couple candles ago if you want to trade it on a higher time frame. But if you come down to the 1, you can see there was a trigger here. Nice trade. I mean, a lot going on here. Price opened above the previous mid, broke through that lowest high, and right now is good for about 6 pips. I mean, nice. Looking at the fibs, 50%, now 61% retrace. I mean, all the classic stuff. You can just pick whatever you want and trade from that. You can lose lower high. This here is the 10% fib retrace line. That's just something that I like to use, the 10s, because chances are, if it doesn't expand the range, it almost always will come back through that 10%, trying to get to the 50. And for the range, December 294, like I said, we did not expand the range, the year-to-date accumulated range, but if we look at the let's look at the ATR first, so we can see what we're dealing with here. December, about 496 is the ATR. So when we take a look at the ATR percent, let's see how much of that ATR we've gone over. Only 59%. And last month we did 121, the only month over 100%. So we'll see what happens with this number. And let's start with the monthly. Price inside the upper wick zone. Price was turning up. Buyer strong control right now. Drop down to the weekly. We're above that EMA 5 or indicator 2. We're above the open. Price inside the upper wick zone. The week we exceeded the previous range by 71.5 pips. Buyer strong control. Crossed above the previous midpoint. We're above the weekly pivot. And we crossed above the pivot. And we've got a higher high, lower low. Once again, we've got an outside bar. And if we drop down to the daily, we're above that EMA 5. We're between the wick zones or inside the body. We cross below that daily pivot. Lower high, higher low, inside bar on the daily. Something to keep in mind because you know what happens, these inside bar levels. We cross below the pivot. And that's about it. Let's see, we're coming up into, next week that's the week before Christmas. I would imagine there might be some tapering off in the action. We'll just have to wait and see what happens. I'm not sure if we're going to... Walmal's back from vacation. I spoke with him earlier today. He was trading, so he'll probably be back online with me next week. And we might continue talking about change and what we as traders need to change and how to change. Because that's really the big thing, you know. It's easy to tell somebody what to do, but can you tell them how to do it? Can you explain it as a process? Like Deming would say, you know, if you can't explain it as a process, then you don't know what you're doing. You know, and the first thing is to become aware of what it is you want to change, and then actually kind of watch yourself. Because, you know, I mentioned that I went back to trading using the previous midpoint, and I switched instruments. I went way out of something that I normally do. I started trading the US 30. And one of the reasons I did that, I kind of wanted to wipe the slate clean, because this way I don't have any biases. I don't have any preconceived notions. I'm not looking for the launch pad. All those little things, just get them out of the way. And, you know, it's almost like it's really starting fresh when you trade something, you know, out of your normal instrument type, which I normally trade FOREX. And, you know, this is, you know, trading an indice or an index. And it's slightly different. I kind of like it because it moves fast. One thing though, it moves so fast around the open, the screen can't keep up with the price. So you have to kind of sit back and watch what happens. I'm not sure if it's a bandwidth issue or if it's a computer processing issue. I might have to try it on my i7 computer just to see what's going on. But it was just, I was kind of watching myself, and it'd be like, I wanted to take profit because I had so much profit. It's like, no, you have to wait till the price, you know, closes above. But I don't want to give back that profit. It's just a real interesting to, you know, listen to or watch my internal dialogue and feel the feelings as my mouse, you know, move my hand to the mouse. I want to click out, but it's just like, just say no. And so, you know, that's how I do it, is just to be hyper aware of what you're doing and just saying, you know, no, I'm not going to do it until. And every time I go to do it, I just repeat, I'm not going to do it until. And, you know, I captured the lion's share of the move. Yeah, I gave back a few points or ticks or whatever, but that wasn't the idea. The idea was to follow the process, you know, all the way through. Because, fellow traders, You know, it's not what you trade, it's how you trade it. So, you know, go out there and drain the banks. This is the Rumpled One, over.